Hello everyone, welcome to Property Zone 9. This is Sean. Okay, today's topic is about second half of property market 2023. What are the things we need to look for? And there are a few things I want to share with you with my slide. So without further ado, I'm just going to bring my screen up very quickly. Okay, and this will be the topic of it. Property market second half of 2023. What to look for? Okay, and basically here, there are three things I want to share with you. Will OPR continue to rise? If you are a property investor myself, I think we cannot just get the interest rate out of our mind. Will Bank Negara continue to increase the interest rate? If there are, what are things that are affecting them and how far they will go? Second thing, additional buyer stamp duty in Singapore. Okay, what are they telling us? Basically, now Singapore has doubled up the stamp duty the foreigner need to pay in order to purchase their residential property. And the other things I want to highlight to you is about the fuel cost. You know, the petrol price that we pump. What happened in 2008 on RON 92 and RON 97? That might be a critical effect that actually drive the property prices up so much between the period of 2008 and 2013. Okay. Now, number one, what you see on this chart, okay, basically the blue color on the left here indicate the real interest rate. But if you minus out the CPI index, it will subsequently bring the interest rate down. Okay, the real interest rate down. So basically, inflation will play a very crucial role to determine what is the real interest rate. Okay. The next one is actually basically the gap, the movement between Malaysia interest rate, which is indicated by the blue color, overnight policy rate, OPR, and the red color, Fed fund rate. As you would have expected, and both countries basically have reduced their interest rate drastically during the COVID period. Right, it was stagnant, close to 0% for US. Malaysia was lowest at 1.75. But since the beginning of last year, US has started aggressively increase the rate due to the high inflation data. Malaysia has also followed suit, but not as aggressive as the United States. Okay, why raise OPR? Right? If so many people are complaining about it, why raise OPR? Two reasons: to fight against the inflation and to minimize the gap between US and Malaysia interest rate. So these two factors, one is internal, one is external. They basically give us a better direction of where the OPR is heading. So understand one important fact: property investment is actually a very long-term journey. So most people who buy a house, we probably taking a 20, 25, or even a 30 years loan. Any drastic change of interest rate policy, like what happened 2 years back, drastic drop, and what happened since last year, drastic increase, it's just going to be a temporary phenomenon. So we should not make a decision to buy a house based on this drastic movement time. If you were to buy a property, under construction property, I mean, you will probably witness a rate drops as early as 2024, before your property even fully constructed. I can show you the articles later. Okay. Now, to fight inflation, we need to know, is our Malaysia inflation still high? Now, our inflation was at the top at the third quarter of last year, right, above 4.5%. But you can see a gradual reduction of inflation rate, and in fact, it was the last reported was below 3.5%. So you are seeing a downtrend in inflation rate. It gives less reason for the Bank Negara to increase the interest rate, at least domestic market. Okay. How about US? If you want to minimize the US and Malaysia interest rate gap, we first need to know where is US interest rates heading. All right. We will know the next meeting from Federal Reserve is going to be 14th of June, which is next week. But based on the speech he gave back in April, they are foreseeing a pause. I think the keyword here is PAUSE, a pause in the rate hike as early as June. So whether it's going to happen, let's wait for next week. Okay, so if US is talking about a pause in rate hike, and in another way, it also gives less reason for Bank Negara Malaysia to increase the interest rate because the gap already smaller. So pause, but some of the analysis or data center already start projecting a reduction in US interest rate as early as end of this year or beginning of next year. So what they say, they are project a year-end 2023 Fed fund rate is going to be 4.75. Now it's about 4.05. So possible a 0.25% interest rate drop by the end of this year. And they're talking about end of next year, interest rate will drop further to 2%. Okay, so this is one of the projections based on the interest rate movement in US. And then the other very important news we just received, and I think all of us have a chance to look at it, is basically the debt ceiling deal. So previously, the self-imposed debt ceiling has already exceeded the ratio based on their GDP. But now the US Republican and Democratic has come to a term. They agreed to pass the bill so that US can continue to pay for the government staff salary and continue to pay the dividend, the interest on the loan they borrow, which is in the form of the US securities they issue. Okay. Now, next, Singapore, a country next to us, a small country, but it's very vibrant. And to be honest, in the recent banking crisis, especially the Credit Suisse, the Switzerland bank, has actually kind of benefited Singapore. Money flowing to Singapore at the fastest pace ever seen. A short recap, Credit Suisse, the sixth largest bank in the world, went bust, and the bondholder almost get back no money from the bond they are holding. Okay, normally these are the ultra rich or fund manager who will be buying the bonds issued by the Credit Suisse bank. So when the banks went bankrupt, by right, bondholder would get back some money, right, ahead of stockholder. But in this case, they get back almost zero. So in a way, a lot of investor or depositor kind of lost trust, confidence in Switzerland banking system. Alongside with the regional banking crisis in US, they are moving fund to Singapore. And when they bring fund, it's not like last time one person go to Singapore shopping, they decide to buy a property or two property into their collection. This time when they move their whole business, they move their whole family. So basically they are kissing their country goodbye and move everything to Singapore. So this is a different impact and it's the different momentum we're talking about. So some of the funds that are coming in, by default, a big chunk of it will flow to the property in Singapore. And foreseeing this going to happen, Singapore government has recently announced, hey, don't come and buy property so much, okay? I don't want the price of Singapore residential property to go up so much. Foreigner come to buy, instead of paying previously 30% additional buyer stamp duty, now you need to pay 60%. So basically, if you're Malaysian like me, if you want to go and buy, let's say 1 million worth of property, 1 million worth of Singaporean dollar property in Singapore, you need to pay additional 600,000 Singapore dollar to the government, which add no value to the property. Okay, but does it differ or does it stop the ultra rich from worldwide, from China, from Indonesia? No, it didn't. China buyer picks up, you can see the headline, 4 unit, despite doubling in foreigner additional buyer stamp duty rate to 60%. They don't care. They just want it. Okay. What else? And then Indonesian billionaire, I think is one of the richest, wealthiest woman, pays 60% ABSD, additional buyer stamp duty for 4-bedder in Scott's Hyde Park. Okay. So the price was almost 12.7 million, all right? And he paid about 7.6 in the additional buyer stamp duty. So totaling cost has ballooned from almost 13 million to close to 21 million. But did they stop them? No. Did they buy? Yes. So what does Singapore's additional buyer stamp duty tell us? The housing market tell us. Sometimes our wealthy people buy things not because of ROI, not because they are calculating on the rate on their investment. Because if you're going to do a calculation on ROI, nobody will pay 60% extra because it will just kill your return on the investment. I think the push factor here is there is no better place to park their wealth than Singapore compared to the rest of the world, especially in the form of real estate. Brick and mortars is always the safest form. Okay? Okay. Number three, what happened in petrol prices back in 2008? So as I mentioned at the beginning, if some of you are coming later, is one of the driving factors other than low interest rate during 2008. I think that one of the driving factor is when the government decide to increase, you can see the RON 97 from 1.9 to 2.7, and the RON 92 that time is 1.88, suddenly become 2.6. I'm not sure how many of you still remember that night. Petrol station was flooded with cars, and the cars are all the way jammed up to the highways, and it make the whole Malaysian suffering the most serious traffic jam, because everyone just drive their car out. Even they have half tank of gas, they don't care, because instead of paying 1.9, they are paying close to 2.7 the next day when it touched 12 o'clock. So eventually, the price of these high fuel prices are channel down and create a domino effects to all industry, and property being the how should I say the main industry that has more than 2,000 sub industry supporting it. Any increment on the cost behind property eventually will be reflected in property prices. So therefore, we are looking at potentially another round of high petrol prices. Okay, this is what I mentioned to you, right? Probably the most important factor in 2008 to 2013 property bull market. We always have to understand this. Whatever price goes up, it's very, very difficult for them to come down. You look at Chinese New Year prices, you look at whatever prices, once it go up, very hard to come down. And now, no, just now I'm talking about 2008, I'm talking about now. You keep hearing about what the current government is mentioning is about rationalization of our fuel subsidy, rationalizations, remove of subsidy for electric. So this, in a way, based on the statistics, although it may only affect the T20, the highest income earner bracket group, but nobody really knows how much of this will be felt to the whole economy as a whole. But definitely when this thing is going to happen, possibly after the 6th state election, we will feel a pinch in inflation data, and there's no other way about it. Okay, so rationalization of petrol prices. Now we don't have 92 anymore. Now we are looking at 95, which is subsidized petrol price. So now the price of RON 95 is at 2.05 per liter. But if you take away the subsidy, the market price, the actual price of RON 95 is going to be 3.22%. So we are talking about an increment that's even greater than 2008, year 2008. Although this is mainly to target the T20. Okay, the implementation wise, we yet to see. Okay, case study. This is a true story. This is one of my friend who happens to own one of the largest auto spare part business in Malaysia. Their office is located in Segambut area, Jalan Kuching. Okay, So basically what it is, he imported a lot of half cut from Japan, normally in the luxury car segment. So for example, if you are driving a Audi or driving a Toyota, your gearbox got problem, your engine got problems, right? Instead of pay full price for the new one, these are the people you go for it. And what they say about the half cut business, half cut shop, okay, is if you can sell the engine, basically the half cut, the cost of the half cut is covered already. The additional headlight, the transmission, the other small things that you sell, everything is pure profit. So in a way, this is a very lucrative business. Okay, margin is, it was higher, but it was still considered high now. Okay, so what happened to him? Because think about this, if you're in a half cut business, you need to put a lot of those car body, right? You rack it up and then you need to display them, you need to turn into a warehouse. You need a place to keep them in a safe and sound environment, correct or not? So when his business is expanding, he bought 2 acres of industrial land at 59 per square feet back in 2008 at the prime area of Jalan Kuching. And he told me at that time that he feel the price is very high. Okay, he almost like so reluctant to, he was hesitate whether he should take this aggressive move to buy these 2 acres of land. But he did, and he glad he did. So the land price now is valued at about 550 to 600 per square feet. This is a significant 10 to 11 times capital appreciation. So the land, if you pay about, I think 4.8 million, if not mistaken, all right? So now the value is more than 50 million. So he was laughingly, jokingly, but I think they carry a very important essence in it. He say his business revenue over the past 15 years, 2008 until now is 15 years. You know, when you run a business, you have an operation cost, you have material cost, you need to pay tax, you need to have provision for bad debt and etc. All these things. He had a good business revenue, but minus all the costs that he have that incurred during the business for the past 15 years. The net profit accumulated is even lesser than the land appreciation. And this is coming from the owner who actually run a business with a reasonably high margin. Okay? So in his own word, he said 2 things. He said he's lucky that his company operation require a big plot of land. Otherwise, he wouldn't even consider about buying a land, 2 acres of land. All his company 15 years hard work earning is lesser than his land appreciation in value. So in other words, is number one, he's very good. He's in a business that require big size of land. Number 2, he make a decision to do it, and now he's reaping the profit from the land appreciation. Land appreciation, even actually more than what he has earned for the past 15 years. So this is one of the things that it kind of shocked me, but I take down, do a small summary, and I want to share with you. I think it's something very fascinating, and if you're not in the line, perhaps you won't know about the insight of this. Okay, so with this, I thank you so much. I think my time is up. I really appreciate. See you next round. Bye bye, everyone. Have a good evening.